let's touch base on where the markets are sitting. So we do have the S&P futures trading sharply lower this morning. This is on the back of more concerns about interest rates going up, the economy remaining strong. And yes, you heard that right? Think about this. The economy is strong, so stocks are going to fall. Kind of messed up thought process, but the bottom line is a strong economy means higher interest rates, or at least higher for longer before the Fed is willing to cut.
Bitcoin faced selling pressure at the Feb. 21 Wall Street open as United States stock markets opened down. Bearish signals were already in for the pair after it saw swift rejection during its latest attempt to flip $25,000 to support. Hello and welcome to Crypto Street. In today's video, founder and chief market strategist at InTheMoneyStocks.com and Verified Crypto Investing, Gareth Soloway updates about Bitcoin's current market standing, the final bottom in crypto, and his outlook for Bitcoin in 2023.
Let's take a look at the 10-year. So this is the 10-year yield. And the reason why you want to pay attention to the 10-year yield is it's basically going to be inverse to generally what the stock market does. The higher yields go, remember the psychology of it. If you can make 10% in a bond, why would you risk investing in a stock when there's risk of that stock going down? So there's the trade-off, right? Now, some people are going to require 20%. Some people are going to require 2% return on a bond to make it worthwhile to switch out of stocks. But there's a trade-off, meaning that the higher yields go, the more people are going to say, you know what? I have this, potential to make risk-free 5%. Let me not risk my money in Tesla stock right now at these levels. Let me put it for that guaranteed 5%. And that's why higher yields in general are a negative for the stock market, right? It forces money or draws money out of it. This is why in 2021, when interest rates were zero, there was no one that wanted to be in the bond market. Everyone said, hey, why would I be in the bond market for a 0.01 return in my money market or in my CD or in my bank when I could just go in the stock market? Sure, there's risk, but you know what? I'll take that risk because at least there's nowhere else to put my money to make any money whatsoever. So that was the trade-off, and I think that's important to kind of recognize and go from there. All right, so let's go to the crypto charts here. Let's get right into Bitcoin, see what we got. So Bitcoin, guys, you can see clearly continues to run into major resistance. The 25,300 level continues to be the level that I have on the chart that is a sticking point for Bitcoin. All right, the reason it is, number one, you have a beautiful parallel channel right here. Look at the trend line, how it kind of connects through these highs. And then look at how many times we pierced this line and haven't gotten through. In addition, the highest pivot, this is the highest pivot since the June collapse, right? Since this collapse over here, the highest pivot was at 25,000, approximately 300. So it makes sense that that's going to be a sticking point in the near term for resistance in Bitcoin.
Amid suspicions over whale movements on exchanges, monitoring resource material indicators concluded that the 200-week moving average, MA, at $25 to $100 needed to become support for Bitcoin to change its long-term trend. IMO, until we see full candles above the 200 WMA, this is still distribution in a bear market rally. And with the bid wall above 24K, shorting from this level has about as much short-term risk as longing.
So if we take a look at Avalanche here, Avalanche had a beautiful kind of move up on the daily, collapse to support, move back up, and then you're basically right into this resistance. So for me, we had already made about 16% on this short prior, and we covered it. Now it had gone right back up to where we shorted it before into resistance. I said, you know what? Let's try a good old-fashioned rinse and repeat. And the idea there is that it's double top, resistance, and also the Bitcoin chart is at resistance. So what I'm doing here, folks, is I'm using Bitcoin as a proxy. All right, so if Bitcoin breaks above that, then that would be a bullish thing for other cryptocurrencies. As long as Bitcoin doesn't break above this area that I just shown, then in general, that's a negative for other cryptocurrencies. All right, so that's that one. Let's go to Ethereum here, see what Ethereum has in store for us. Now, Ethereum continues to have kind of the same channel lines up here. There's a lot of resistance. But the positive on Ethereum, you could make a case that it's making bullish consolidation. It's not the prettiest, right? By no means is it the prettiest bullish consolidation, but it would be classified loosely as bullish consolidation. Now, what does that mean? Well, it could mean we have one more move up to maybe around $1,785 before we hit major resistance. All right, so again, keep an eye out for that. That is a possibility on ETH that you could have one more move up. What would change my mind? See this upsloping trend line that we got below briefly and tag this support. If we start trading back below that, that would negate the bullish pattern, and you'd have to start expecting a bigger move back to the 1300 range on that chart. All right, let's keep going, guys. I want to look at the SPY chart here. See what we got going on here. And again, bullish consolidation right there, again, on the S&P 500. Now, this is prior to what we're seeing today. We are seeing the spiders dropping pretty sharply. I'm not looking to play this bullish consolidation. Instead, I'm waiting patiently for a retrace to what I call the scene of the crime. What is the scene of the crime? Let's do some education right here. The scene of the crime is basically when you have a major breakout of the trend line and you retrace to that scene, essentially, of the breakout crime. All right, so if we zoom out on this chart on the spiders, you have a pivot high from the all-time high in the S&P, pivot high, pivot high, pivot high, pivot high, and you broke out right here above the blue line. So if we get back to that blue line, there's a swing trade opportunity, not a long-term. I'm not a long-term bull on the S&P, but a swing trade long, absolutely right there. That's at around 393 on the SPY, which is the tracking ETF for the S&P.
Market's correcting, which is great for people who look for entry points. Might go down a bit more from here before we'll turn around. Week of consolidating before continuation. Corrections remain to be relatively shallow. I think that we'll continue the run towards 35-40K before we'll have a harsh correction, maybe even to 20-25K. Maximize profits, start allocating towards USDT the higher we come, buy on the correction in the second half of 2023.
All right, let's take a look at gold. I want to look at gold here. The gold chart here, we are seeing it trying to hold support right here. I still think there's one more move down on gold here, down to this level here around 1800. Before it becomes a full-fledged bull market. So again, we'll watch that to see, and we'll go from there. Okay? All right, so that's one of the things to kind of keep an eye on here. Let me look at CSX real quick. So CSX, guys, the chart is mediocre at best on the daily chart. I'm not really seeing much. I see this trend line, which is what you want it to break. If you want to get a breakout, you have to get above 3270. You get above 3270, it's off to the races higher. All right, then you're talking about 34 to 35 bucks as a next target. The one thing you don't want it to do, right? Check out this. Look at this trend line here. So if we take this pivot low and connect it to this pivot low, basically what you have forming, and it makes sense, right? Look at the tight range that it's been in all over here. So it's basically in what we would refer to as a wedge pattern. And a wedge pattern, again, this is a slightly bullish wedge because you have a bullish consolidation inside bar, but it's not super bullish. Like, I wouldn't rank this as a high percentage trading opportunity. Essentially, it's not something that I would be taking. But if you are in it, you want to see, if you're long this, you want to see a breakout above 3270. And what you don't want to see, where you would keep your stop, is any daily close below 30 and a quarter. So it basically gives you a range there of what to look for on the chart. Okay. All right. Next up, let's take a look here and see what else we have on the chart. Let's go to the silver chart real quick, and we'll go from there. So the silver chart, guys, it did hit support. I did pick up a little SLV with my trading group at Verified Investing Alerts, which is at inthemoneystocks.com. And again, we are in the money slightly on that. I added right down in this lower range right here. And again, I will continue to add. There's a lot of support here on silver at all of these lower levels. I think the most downside you probably would get would be around $20.80, somewhere in that vicinity. But I actually do like silver now. Silver is now pulled back into a range where it actually makes more sense for me. Okay, we'll do one or two more questions. Let's talk about Tesla today. So Tesla has remained resilient. It was up on Friday. I think pre-market it is falling. Let me just double check. Yep, it is down pre-market at 205.70. But the most important thing on the daily chart is that it's into major resistance here and here. So could it go up to 223? Yes. But between these two levels, I expect a big pullback back to about $140. So be very careful if you're long Tesla here. This is not something that you want to. Remember, the stock has rallied 100% off of the lows. So you shouldn't, for me, I'd never buy something that's even up 5% off the lows. I just don't want it. I'm not going to chase it. That's the key. but the discipline in trading, the mental mindset of a trader is what makes me a legitimate, successful trader. If you have no discipline and you're buying things after they've rallied 100%, aka Bitcoin at 65,000 or 69,000, you will ultimately lose money. All right, you'll lose everything. It's just the nature of the beast.
So, what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.